to bring in Cameron Dawson. She is Chief Investment Officer at NewEdge Wealth. And Cameron, just watching the markets, 4 days in a row of gains now, and all four of the major averages at their highest levels for the last 52 weeks. You think that the market is starting to feel a little overbought here?
Yeah, if we look at measures like the RSI, clearly we're now in overbought territory. What's interesting is that we got there back in November, but we were able to digest that simply with time. So being overbought doesn't necessarily have to be a very negative thing, but it is important to note that we have moved very far, very fast to the upside. One of the things that we're watching very closely as we move into 24 is that if markets remain strong, we continue to drift higher, where does that leave us on things like positioning and sentiment? We're in areas where positioning is overweight but not extreme. Sentiment is optimistic but not yet extreme. But we are nearing those areas, and likely that could become a very important watch item for 2024.
Does it feel like there's a little bit of FOMO out there, a little bit of fear of missing out as you get to the end of the year and things keep melting up?
Yeah, I think certainly. One of the things that this reminds us of actually is the beginning of 2018, where we did have, as you said, a melt up where you didn't really have any macro boogeymen to scare people out of markets, and people thought that they just had to get in. And that's where you see positioning chase into things, chase into areas that have been very strong this year. But then it comes to the point where we'll have to assess to say, where does that positioning reflect versus where expectations are for earnings, where valuations stand? But again, that's likely more of a question for 2024 versus the last 2 weeks of this year.
So we have the PPI number coming out in less than an hour's time. You've also got Jay Powell speaking later today. What are you watching from those two events? What do you need to hear?
From PPI, it likely will be benign simply because of energy prices. They've continued to fall, and that's a very important part of PPI. But then when we look to Powell, we'll continue to probably get some pushback against the aggressive pricing of cuts into 2024 of over 100 basis points. When we think about the dot plot, it's likely that the dot plot median will only endorse about 50 basis points of cuts. But then it's a question of, will the market care? Powell has pushed back against this cuts pricing just a few weeks ago, and the market shrugged that off and said, no, we think you're still going to be cutting a lot. So it'll be very interesting to see the market reaction, as Powell will likely strike a bit more of a hawkish tone than what is being priced in by bond markets.
You know, you said that the market you thought was overbought in November, but that we caught up with it in a matter of weeks. What happened to change to say, okay, in a few weeks, this all of a sudden makes sense?
Yeah, I mean, we got to that overbought state in about mid-November, but instead of having a big correction back to trend, we just sort of traded sideways. And so now as we've drifted higher again, we're back in that overbought state. Like I said, it can actually be a sign that people are clamoring to get into the market and that you have good momentum. Breadth is a lot better. However, again, we'll have to be very aware and cautious about where positioning will end up, where valuations end up, sentiment, all of that put together to say how much good news, how much soft landing nirvana is already priced in.
Yeah, I mean, because when I think of something growing into it, I think of earnings catching up with expectations, but you're talking about just sentiment catching up.
Yeah, and I think that's also a very good point, is that in this melt up that we're in and been having, is that you've actually seen earnings estimates get revised slightly lower. It's not low enough yet to sound off alarms to say that earnings are going in the opposite direction of the market, but that's another really important thing to watch in 2024. You have double-digit earnings growth priced in for 24 and 25. Does that create a high bar for earnings to jump over, just a surprise to the upside? And so watch earnings estimates mostly into 2025, because if those start to drift lower, that may be a key risk for the market.